Hello everyone, Rahul Shah here, trying to make investing accessible and profitable for the average investor. Every second, the stock market measures millions of numbers: prices, volumes, market caps, percentage gains. It measures everything. Everything except the one thing that actually matters. Now, that mistake has destroyed fortunes for more than a century. And strangely, a physicist who died over 100 years ago saw it coming. His name was Lord Kelvin. Now, Lord Kelvin was one of history's greatest scientists. He believed something very simple: if you cannot measure something properly, you don't really understand it. His famous quote says, "When you can measure what you are speaking about and express it in numbers, you know something about it." Let me repeat. When you can measure what you're speaking about and express it in numbers, you know something about it. Most people think he was talking about physics. I think he was talking about investing without even knowing it. Here's the strange part: the market gives you a stock price every second. It tells you a company is worth rupees 500, rupees 750, rupees 1000. The number is exact, down to the last decimal. But here's the question: does that number tell you what the business is actually worth? Not even close. Imagine you're buying a house. Would you buy it because your neighbor paid 20% more yesterday? Of course not. You'd ask better questions. How much rent can it earn? Will the neighborhood improve? Will it be worth in 10 years? Or, in fact, what will it be worth in 10 years? You're measuring its earning power. Stocks deserve the same treatment. Yet, many investors don't do that. Look at what happened in South Korea. Many stocks soared. Retail investors rushed in. Everyone watched the same number, the stock price. People celebrated every new high. Television channels tracked it. Social media talked about it. Apps refreshed it every second. But very few people asked the only question that mattered: has the business become more valuable, or has only the price gone up? Because price and value are not twins. Sometimes they become complete strangers. Think about this. A speedometer measures speed perfectly, but it cannot tell you whether you're driving toward your destination or away from it. The stock market works the same way. It measures prices with amazing precision, but price alone tells you nothing about whether you're getting richer. You can measure the wrong thing perfectly. Most investors know the daily return, the yearly high, the trading volume, the market cap. But ask them one question: what is the intrinsic value of this company? Silence. It's like knowing someone's body temperature but having no idea whether they are healthy. You're measuring, just not what matters. Every bubble begins the same way. People stop asking, what is this business worth? They start asking, how high can the stock go? That one question changes everything. Investing becomes speculation, because speculation does not need valuation, it only needs another buyer. Warren Buffett once said, "Price is what you pay, value is what you get." Lord Kelvin explained why. Knowledge comes from measuring the right thing, not the easiest thing. Price is easy, value is hard. That's exactly why almost everyone measures price and so few measure value. So the next time someone tells you this stock has doubled, don't ask how much has the price gone up. Ask how much has the business become more valuable, because the easiest number to measure is often the least important. And that's the lesson Lord Kelvin taught the world long before the first stock market app, long before South Korea's rally, and long before most investors forgot the difference between price and value. Well, that's all from me today. I'll see you again in the next session. Goodbye and happy investing.